Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, the flatness in the market simply continues. We know that yesterday was a bunch of non-action, and today was roughly the same. As you can see right here, the SPY roughly flat on the day, only down about 0.18%, and the QQQs also roughly flat on the day, down about only 0.07. There was not much action to be had over the course of the day, as there was really not much in terms of economic news. The big day is going to be tomorrow, especially because we have the non-farm payrolls, of course, and the expected move for the markets is about 1% in either direction. And if that data is bad, guys, I would not be surprised if the markets even tumble a little bit further. We know that this jobs report is going to be the most watched thing, especially over the next few months, because that is the major concern right now. Is the economy still healthy? Is the jobs market still healthy? And if they are not, are we potentially heading into a deeper form recession than people are anticipating? As of right now, guys, the data does not point to a deep recession. We do have a few cracks here and there, a few red flags here and there, but I wouldn't say that any specific data point is necessarily falling off of a cliff, right? So tomorrow's data is going to be front and center. Now, we did get something very positive in the after hours today, and that has to do with one of the pieces of uncertainty we've been dealing with this week. We know this week has been marred with uncertainty, especially since the Tuesday session, right? Especially in terms of the geopolitical conflicts in the Middle East with the Israel and Iran situation that's currently ongoing. But this was piece of news number 2 that had the markets a little bit spooked, especially because of concerns of resurgence in inflation in the event that this one were to persist for more than a few weeks. Well, happy to say, guys, that this conflict at least has now been resolved. Port strike ends as workers agrees tentative deal on wages and contract extension. So the port strike is coming to an end after only 2 short days. And that was kind of the anticipation, guys. The markets kind of anticipated this as well. I would have been very surprised if this one would have lasted for longer than a week, especially in an election year, especially during times of economic uncertainty right now. There really was an overwhelming sense that this needed to be resolved soon. So I'm happy to see that the workers' unions and the employers have come to this agreement. The ILA president, Harold Daggett, said that the union was asking for an increase of $5 per hour for each of the 6-year contract. This contract has been extended at least until January, guys. Take a look right here. ILU wages will increase 61.5% over 6 years under the tentative agreement, and they've extended their contract until about January 15th to return to the workforce as soon as tomorrow. So it gives us a lot more time and a lot more leeway here, especially in terms of managing expectations for inflation, for managing the economy as well, right? So very happy to see this one resolved. It takes a lot of that uncertainty off the table, at least for now. So those are pretty much the headlines of the day, guys. In terms of your market price action, what we're going to cover today is going to be a technical analysis rundown of our major market indexes, followed by a technical analysis rundown of our major big tech names, see how everything is kind of shaping up before tomorrow's data, and where the markets could potentially head in either direction, whether the data is positive or negative tomorrow. So a couple things to cover in today's video, guys. Let's jump into it right away. So the SPY down about 0.18%, the QQQ down about 0.07%, as we've described before. But the key in these markets, guys, is to follow the money. It is all about rotation right now. And a few of the market leaders, a few of the sectors that have been leading the market in the past 1 month and a half, as technology has kind of been subdued, are now some of your lost leaders, guys. So we have some big rotation happening, especially over the past 2 weeks. So we'll put a lot of focus on that in today's video. Take a look at the heat map right here. And this is what I mean by rotation, guys. Semiconductors, which have kind of been left behind for the past month and a half, 2 months of trading, they have been doing a good job over the past 2 days of upholding the entire market, essentially, right? The entire rest of the market, everything except for energy getting a boost, of course, off the back of those geopolitical tensions. Everything has pretty much been to the downside. It's now been 2 days in a row where we've had net losses across the S&P 500. A lot more names have been red than green. And if it were not for semiconductors, guys, I would dare to say that these markets would have been down almost 0.5% to 1% on each of the last 2 trading days. But so far, not too bad, right? Big tech, once again, very, very, very mixed. Amazon losses kind of being offset by Meta as well. Tesla not having the best day either, 3.36% to the downside after a slight disappointment in deliveries. And thereafter, guys, the bottom half of the market not doing too well either. Financials taking a little bit of a further bath today. Healthcare as well has not been favored over the past 2 weeks after really leading the market rally in the month of August. Late September into early October has not been kind to healthcare. I do believe that's just a temporary technical correction in healthcare right now. Industrials as well, not doing the best today. Real estate, utilities, basic materials, nothing doing well today. Not even consumer defensive. Consumer defensive has been one of your industry leaders, or rather market leaders, over the past 3-4 weeks, up until pretty much this week when they decided to take a much needed breather. And as you can see, only energy etching out some gains. On the one-day relative, you can see that even better. Only technology and energy putting out some green. Everything else, big red to the downside. On the 1 week relative, the picture is largely the same. Energy, communication services, largely led by your two big ones, Google and Meta, which have had a great week so far. Those have been keeping communication services afloat. Utilities also to the upside, but look, everything else really to the downside right now. On the 1 month relative, it is slightly different. Only financials, defensives, and healthcare pulling back. And I'll bring your attention to these 3 bottom ones, guys. They did outstanding in especially late August into September. But now over the past 2 weeks, they have been getting a well-deserved pullback. So let's get into the rotation right away, guys. We need to follow the money, right? So moving into the SPY technical analysis portion, well, we can see the SPY is still in a beautiful daily uptrend right now. The bulls playing great defense above our support level right here, which is about 564 down to about 560. I would not say that there are any red flags as of just yet. However, if the non-farm payrolls data tomorrow is extremely negative, well, I do expect these markets to put in somewhat of a daily downtrend and start challenging the lower end of the support level right away. Would that be an entirely bad thing? Well, not so much, guys, especially in terms of the longer time frames, right? Full bull control on the weekly time frames right here. If anything, we would just be looking for further weekly consolidation, looking for a weekly higher low, anything above 540. Pretty much just looking for that weekly higher low. Good confluence right now. The green box of support I was just showing you on the daily and the 12 EMA on the weekly are sitting right there. So the bulls definitely have a lot of support below them. And I wouldn't be too concerned if the jobs data is slightly negative tomorrow. If it's very, very, very bad, like the one we got in August, well, then we could see a little bit more follow through into the next coming week. But I do believe, guys, that this one has a good chance of finding a higher low before maybe moving on a little bit higher. Keep in mind as well, guys, October earnings are definitely going to be a very, very, very big catalyst for this market. Most of those start in about 2-3 weeks worth of time, right? This is next week. We don't have that many very large companies except for Pepsi, which will be noteworthy to us. Not that much else other than that next week. And then the following week of October 11th, we're going to have some pretty good ones, guys. Especially we're going to start getting a lot of the banks, right? Some JP Morgan, BlackRock, especially. We're going to get also TSMC on the Thursday session, Wells Fargo, Citigroup, Bank of America too. So this is going to be where all of your earnings start kicking off in a major fashion. And then of course, the rest of the month is going to be where all of your major earnings are going to be sitting. So we still have a few weeks of time, guys, before these earnings start kicking in. So I wouldn't say those catalysts are on the table quite just yet. Now, in terms of the QQQs, not looking too bad, guys, especially due to your semiconductor performance, right? As you can see, the QQQs have been coming ever so slightly down with the rest of the market in the past 5-6 days, but I wouldn't say it's too worrisome just yet. Daily uptrend is still in motion right now, trying to find the daily higher low and reacting very nicely from our zone of support. 483, roughly down to about 478. The bulls playing pretty good defense right now. You can even see that on the weekly, right? On the weekly, beautiful uptrend right now. So even if the jobs data is negative tomorrow and sends us into a little bit of a daily downtrend, just be in tune to the fact that we're just looking for a weekly higher low. Anything at this point above 447, looking for the weekly higher low for a possible further trend continuation. So I would not say there are any major red flags just yet, guys. Why? The bulls control all of the higher time frames, guys. They control the monthly time frames. They also control the weekly time frames. It's just we're getting a little bit of negative price action on the daily time frame. Moving into XLF right now. As you can see, XLF has also been somewhat weak in terms of market leading here, the rally in the late part of August, or rather all the month of August and early September. We've now just been consolidating roughly sideways in a tightening range over the past month and a half of trading. Now, this is pretty much a stark contrast to QQQ, right? QQQ has been doing the whole lot of nothing over the course of, you can see right here, the end of the month of August through right now. Not much price action, right? The financial sector was really the one that kind of led us a lot higher. And the following sector as well, healthcare too, did a great job. And now the QQQ has kind of been back in the game here, especially over the last 2-3 weeks of trading. Financials having a little bit of consolidation, and healthcare as well. Why does that matter? Well, because XLF and XLV are your other two largest sectors in the market measured by market weight. So it stands to argue, guys, if the QQQs are performing better than expected, it gives some breathing room to XLF and XLV to go into that much deserved consolidation, cool down some of the higher time frames, and we have a very decent amount of market rotation right now. So financials not looking too poorly at all today, establishing some double lows right now, but be very cautious, guys. If tomorrow we break to the downside, that would be daily downtrend underway, and we would just be looking for further weekly consolidation. This one as well, still in a very beautiful weekly uptrend, just looking for some extension of this consolidation range rather. And I wouldn't be too worried, guys, unless we start losing the 12 EMA and come too deep into this area of support. As a matter of fact, let me just put a little green box here so it's more apparent, right? So this is the area that we're going to be targeting. The bulls still with a lot of space on the weekly, guys, at this point. Anything pretty much above 43.4 is just going to be looking for a weekly higher low for possible further trend continuation. So the banks and financial sector still have a lot of wiggle room, especially when measured by the higher time frames. Look at this monthly chart, guys. Any red flags here right now? Not quite, right? Still just even shopping for the monthly higher lows for possible further trend continuation as we get further into the rate cut cycle. This should probably be very bullish for financials. Moving into healthcare right now, another sector that really since the early portion of September, well, at least maybe since the mid portion of September, right? Has not been doing too well. And that's perfectly fine, guys. Look at this date right here, right? 16th of September. What's been doing good since the 16th of September? Well, the QQQs. QQQs have been fairly outperforming. As you can see, this one in a daily uptrend. And unfortunately, healthcare right now in the daily downtrend. All about sector rotation right now. So everything not looking too poorly. Daily downtrend is indeed confirmed on healthcare, and we're entering this big area of support here, guys, about 151 down to about 150. I wouldn't say that it's that big of a deal, especially when we take a look at the higher time frames, weekly and monthly, right? We know that healthcare, unfortunately, is the only sector right now that has lost the weekly uptrend. We are in the weekly downtrend right now and coming into a hot area of support. Why do I say that it's not too big of a deal though? Take a look at the monthlies, right? The monthlies are looking gorgeous across the board. Beautiful monthly uptrend. After 4 months worth of uptrending rally, it stands to argue that the healthcare bulls can afford to take a little bit of a break, a little bit of time off, as we can say. And I think the lowest we might be able to get, guys, is this yellow line right here. Previous support back here in the higher end of March and April, and coming into the monthly 12 EMA as well. So if things really continue to unravel over the course of the next few weeks in healthcare, and we perpetuate this weekly downtrend a little bit further, just understand what the bulls are looking for in the higher time frames. Just looking for the monthly higher lows for further uptrend continuation. And I will be patiently waiting for a few of my favorite healthcare names in the game right now. Talking about UNH, if you get some further pullback in UNH, probably going to be shopping for some around the previous all-time highs. And another one of my favorite names that I'll be looking for, guys, is probably AbbVie, right? AbbVie, extremely strong. Same thing though, 4 months worth of rally, not much in terms of monthly pullback. So if you get that monthly pullback closer to the mid 180s, I'll be looking to shop. And another name that I've brought up on the channel recently is TMO, Thermo Fisher Scientific, right? Setting up beautifully for a monthly higher low and probably going for that monthly extension here later on into 2024. Even the shorter term timeframes, guys, are not looking too bad. So as healthcare continues to pull back, we need to be identifying our favorite opportunities, putting them on the back burner, and if they come into our desired levels, we are going to be ready to strike. Now moving into semiconductors right now, semiconductors with a very, very, very good day, once again, making up for a lot of the damage in the rest of the market. So as we can see right here, beautiful daily uptrend on semiconductors. Daily higher low has been established with the low of Tuesday, and now we are simply looking for the extension of this daily uptrend higher. Just be mindful though, guys, there is some big resistance above us, this big red box, talking about 257 down to about 248. So curious to see, can the bulls get some good gains in and start recapturing this very challenging level that's been kind of plaguing us ever since we broke through it in the late portion of July? If we can do it, perfect. Going to be looking for the breakout and then maybe retest trade. That could be a nice trade entry opportunity. However, guys, if we get rejected, I would like to see the bulls at least maintain somewhat of a tightening range, right? Not break the lows of Tuesday. This would be a best case scenario for your semiconductor bulls. Excuse me, got something in my eye. Best case scenario for your semiconductor bulls, especially because we know that we have some big earnings coming in, guys, and that's going to be the week of October 14th, and also especially the week of October 18th, where we get big more companies such as Lam Research, ASML, and a few more, right? So we need to at least maintain somewhat of a tightening range until that time span. The worst case scenario, of course, would be the lower high and then lower low daily downtrend, which would just send us into this perpetual tightening range even on the weekly time frame, right? So that's kind of the one thing that I'm looking out for in the event that semiconductors cannot get the weekly uptrend expansion going, is at least be able to protect this tightening range and protect this big green box of support below us, 238 down to about 225. That's what I'd like to see the bulls hold at least for the next 2 weeks until we get into those big corporate earnings, which I think for semiconductors should be quite good. Moving into the IWM Russell right now, the Russell still with the rest of the market coming down ever so slightly, right? So the Russell daily downtrend is confirmed, of course, and we are just looking for a bit further weekly consolidation. This one kind of looks like semiconductors, right? Not doing a whole lot of anything. There's been a lot of tension in growth as of recently, a lot of pivoting to more defensive names over the past month and a half, of course, just because we have a lot of these same recession concerns, right? Conflicting data all over the place, a lot of uncertainty coming into earnings season as well. So very tough for a lot of our growth names to start running. That being said, the tightening range is not looking too bad here, guys, right? The bulls are going to eventually try to protect this lower area right down here, 210 down to about 208. That is going to be the big area of contention that the bulls need to keep up if they want to keep this tightening range alive above this area and keep the longer term time frames not looking too bad, especially the monthly, right? Because right now on the monthly, we are just still shopping for some monthly higher lows for some potential trend expansion in the event we continue getting bullish data. The Federal Reserve is correct in assuming the soft landing and we get the actual soft landing scenario play out. Well, the bulls are looking to protect this monthly price action and set themselves up nicely in the event we get the green light from the economy, get the green light from the Fed. Soft landing is all but insured over the next 2-3 months worth of time. At least they've set themselves up beautifully to keep this monthly uptrend alive. So that's just kind of how I'm seeing it, guys. Not expecting tremendous rallies in the Russell, at least through the month of October. That may be reserved for the months of November and December as we embark into bullish seasonality. And if we can get some more good data out of the economy, right? Good jobs data and good economic output data as well. And now lastly, moving into the Dow Jones. Dow Jones not looking too bad here, about 0.44% to the downside. Not looking too bad, right? Daily uptrend is set. Daily higher lows are set, and now we're dealing with a little bit of equal lows. So challenging the equal lows right now, you guys know the drill. If we were to lose this into tomorrow's session, you open up the door for lower high into lower low, daily downtrend price action will be underway. And at that point, we'll just be looking, guys, on the Dow Jones for your weekly higher lows for possible further trend continuation. All the confluence is down here, about 41,300 down to about 41,000. The weekly 12 EMA is there as well. So even if we roll this over on the daily, guys, is it that big of a deal? No, the bulls control the weekly timeframes and the bulls obviously control the monthly timeframes too. Beautiful monthly uptrend underway right now. So I would not be too nervous to say the least. Our other sectors as well, as you can notice, consumer defensives, daily downtrend, right? After performing excessively well for the last 8, 9, 10, 11 weeks of trading, well-deserved pullback, which is why I'm saying keep an eye on that rotation, guys. A lot of the sectors that have been outperforming since we've been getting that rotation from growth to value since the mid-July point, now we're starting to kind of revert, right? These need a little bit of a breather sometimes, and you can see that best on the monthly. Beautiful monthly time frame expansion, looking for the monthly higher low for further trend continuation. No red flags whatsoever in some of those more defensive industries right now. Energy has been having a great time so far too, looking for the potential monthly trend expansion. Energy's been consolidating for the last 5-6 months at this point, so nice to see them get a little bit of love. Maybe for the wrong reasons, right? I don't want to celebrate any geopolitical tensions in the Middle East, but it's nice to see the sector as a whole come back alive a little bit in terms of the last week of trading, right? Especially if you're exposed to any oil plays. So that one has not been doing too bad at all. Looking quite good as a matter of fact. Daily uptrend is set. A lot of space for the higher lows. Anything above 85. Looking for the higher lows for some further trend continuation. And a few of the names that have been reacting, well, most oil names have been reacting very well to it, but OXY really coming back alive after getting destroyed in the past 3-4 weeks of trading. And another one that I was looking at on the channel telling you guys about, of course, was CVX, right? CVX in this lower area right here. We hinted at it a lot over the past week. So nice to see you guys that we have some decent gains on CVX as well. Now, moving on further, guys, in terms of, I want to cover some 20-year bonds. So TLT, right? A lot of people have been watching the TLT trade and wondering what's been the issue so far. We've touched upon it a few times on the channel. So let me just reiterate what exactly has been happening, right? So we know essentially that since the moment of time that the Federal Reserve cut interest rates, yields on the 20-year bonds have been going straight up, right? Now, the reasons behind this, well, can be due to a few things. Number one is going to be bond trader speculation, but number two is going to be possibly the fact that the markets were anticipating a lot worse economic data, right? That is the reason that your 20-year yields would plummet, is when the markets are anticipating faster rate cut paces by the Federal Reserve because of deteriorating data. And so far, the data that we've received since those rate cuts has not been showing a deteriorating economy for the most part, right? So we have a little bit of repricing. This price action right here in the month of September was the markets trying to price in faster rate cuts by the Fed. Then when the Fed came out and said, no, we're going to keep the same pace as we've been telling you guys for the last 6 months. Well, now is what's happening, guys. You're having a little bit of unpricing of a lot of those fears that have been had, right? But one thing is for sure, we are still on a 20-year basis, right? This is just the inverse of your 20-year bonds. This is the yield curve, or the yield chart for the 20-year bonds. We are still in a longer-term downtrend, guys, and I expect this to continue. This is the rate hiking cycle. Longer-term monthly uptrend, as you can see, but gets choppy midway through, right? We do have some pullbacks, and similar fashion, guys, 20-year yields will be the same to the downside. We know that rates are coming down, guys. Whether we have a recession or no recession, yields will be coming down. If we have a recession, yields will come down faster. If we don't have a recession, yields are still coming down, guys, right? So you have to be a little bit patient with this trade, and TLT is exactly the same. We do have the monthly uptrend in motion right now, trying to set up the monthly higher lows, and just continuation of the grind higher on the TLTs. So obviously, in the most recent couple weeks of price action, we have been getting, we've been getting a lot of downside on the TLTs. That is completely normal, but I wouldn't say that the weekly uptrend is in jeopardy of being destroyed right now. We're coming into a big area of support. This was resistance in the past. The bulls should be able to use it as support. We are also above all of our moving averages, and even on the monthly too, right? I do not see any monthly red flags. This one should continue its expansion at either a slow pace if we keep getting good economic data, or at a faster pace if economic data starts unraveling and the Federal Reserve is forced to cut interest rates more quickly, right? So all in all, this chart will be moving up over time. It has no choice. Rates are coming down. Now, the pace of the acceleration of this chart all depends on whether or not economic data is good or bad. But this one should still be a very good trade, guys, over the next 1 year's worth of time. But as I've been saying a few times on the channel, it is not NVIDIA, right? Do not expect it to go up like this. As a matter of fact, if you're expecting it to have a very violent rally to the upside, you're essentially expecting us to go into a hard landing recession. And at that point, I'd be very careful, right? Because if you're having TLT as a hedge right now and you're disappointed that it's not going up, but you have 90% plus of your portfolio that's long, be careful what you wish for, right? If you want your TLT position to have a massive gain, you're essentially saying that the rest of your portfolio is going to get completely destroyed. So be careful, right, in that respect. Now, let's move into our big tech names, shall we? So moving into Apple really quickly. So Apple not looking too poorly. So Apple down about 0.49%, about 0.5% as a whole, right? And we are still dealing with our overhead resistance area on Apple, or rather this whole support zone, this whole area of congestion that we've kind of been trapped in. We have a few outside moves, to the downside and also to the upside. But for the most part, 227 down to 223 has been very, very, very challenging for both the bulls and the bears alike. Now, we know that we've been establishing somewhat of some equal lows down here. So once again, it is all up to the bulls to play defense right now. Equal highs as well. So no confirmation of the daily uptrend. They tried for it, got rejected, but also not setting any new lows. If the data tomorrow is negative, I do expect the daily downtrend to follow through. And then we look to our lower area of support, which is this 219 down to about 215, to act as another line of defense for the bulls. All in all, the weekly is also not looking too bad, but very, very, very choppy, right? They tried for the weekly expansion twice now and unfortunately are not getting it. So depending on tomorrow's price action with the non-farm payrolls, I expect this one to break either way, right? If we get some good jobs data, the bulls can have a chance of rallying back and starting to retest the higher end of this and potentially get the weekly uptrend back in motion. But in the event the data is bad, expect some further weekly consolidation on Apple, guys. And that is pretty much just how I see this chart. Very, very, very messy right now, but I do not see any short-term swing trades on Apple, guys. There's just not that much, there's just not that good risk reward, right? Our risk is all the way down here. Our reward is all the way at the all-time highs. It's pretty much equidistant right now. Not very good trading conditions for Apple. In terms of a long-term portfolio buy, well, if you don't have any Apple, maybe as a first-time position, but if you already have some, I'm not buying, guys. The valuation is just too high right now. The revenue growth is just too uncertain. The iPhone sales, the iPhone 16 sales have not been up to par with what analysts were expecting as well. So I'm very surprised that Apple is maintaining its current share price. If anything, I expected it to have a little bit more dip. And that is one thing, guys. If we do get a little bit more dip on Apple down below 210, that's where I want to go shopping for more shares. Now, moving on to AMD, and give me a very brief second. So moving on to AMD up about 1.92%. And this one, guys, is looking quite good if I do say so myself, right? Daily uptrend is nicely underway. Daily higher lows have been found with the lows of yesterday. As you can see, we've recaptured the hourly time frame at this point. So that's how we know that your daily consolidation is finished. Not looking too bad. So we're looking for the continuation of this daily uptrend expansion, pulling into this big area of support, right? This big red box. We've been talking about it now for a while. We had the breakout, retest of this range, testing the 12 EMA, and now the bulls are looking for that expansion. However, in the event we get some bad data tomorrow and we fail, well, unfortunately, that would be daily downtrend on AMD. And at that point, we'd just be looking for some very healthy weekly consolidation too, right? Beautiful weekly uptrend, looking for a weekly higher low, anything above 132, looking for that weekly higher low. And I still do maintain, guys, if we drop a little bit lower, the best way that I'm going to be using to play this one is playing short puts. Short puts in the 150 range. I would not mind picking up a few more shares of AMD. All of our short-term moving averages are below us, and we're still having a very good buffer of support too. So looking very good on this stock. Probably one of my favorite semiconductor names leading into the next 1, 2, 3 months of trading. Even for a little bit of call options, guys, I really wouldn't be opposed to taking that speculative bet, especially leading into AMD's best quarters coming up in terms of their fundamentals, right? We know the data center ramp is live. Take a look at this EPS expansion, Q3 and Q4. You know, when you contrast that to the last roughly 2 years, you can see the data center expansion is going to start to be recognized now in these 2 upcoming quarters. And you can see revenue expansion as well. And look at the yearly, guys, right? Flat for the last 3-4 years. Now we're coming into data center ramp. EPS flat for the last few years. Now we're coming into data center ramp 2025. So this one, definitely one of my favorite plays, guys, for 2025. We've been flat essentially all year at this point with some swings outside to the upside and to the downside, but largely flat since early January. So now is when I want to start building more positions for AMD if our time horizon and thesis is the 2025 ramp. Now moving into Amazon. Amazon not looking too bad at all, down about 1.52%, and unfortunately losing some of our daily uptrend, right? So daily uptrend was underway, and now we have significantly cut the higher lows, which are sitting right here at 183.50. So daily uptrend has been lost, but no establishment of a lower high into lower low for the actual daily downtrend, right? That could be coming, however. Be very mindful, even if tomorrow is an update for the markets. We have overhead resistance right now, 187 up to about 190. Could be a lower high into lower low scenario if the markets continue to maintain weak overall over the next 1-2 weeks into earnings, guys. That could be a pattern to watch out for, but it wouldn't be a big deal in my humble opinion because we're just looking for an Amazon weekly higher low, anything at this point above 169, looking for that weekly higher low for further trend continuation. One thing is for sure, if we come into this lower area right here, guys, talking about 180 to about 175, our previous level of resistance right there, big area of kind of congestion coming up on it right now, right? I will be a fan of playing some short puts, 180 to 175. I want to pick up some Amazon shares, guys, especially before their Q4, which is also known to be as their best quarter, looking very good and no red flags on the monthly, guys. A lot of sideways consolidation, but where is that consolidation on the monthly? Above the prior all-time highs. This, in other words, is one massive bull flag I think 2025 is going to be that extreme ramp by Amazon bulls well into the 200 area. So I want to grab as many shares as I possibly can while we still stagnate in this location for that 2025 expansion. Moving into Google right now, Google not doing too bad at all, roughly flat on the day and protecting gains. We know that Google has a beautiful daily uptrend going for it right now, just looking for the daily higher low for possible further trend continuation if the markets remain fairly good, right? Now, daily higher lows are right here, 162, so the bull's still with a lot of space. And we're now using the moving averages and the above resistance, which is now support, in our favor. So the bull's not looking too bad at all. Where we start to get a little bit worried, guys, is if we take back too much of this move in relation to that 162, and then we kind of open up the doors, guys, for the bears to set up for the lower high into lower low. That would not be a bad thing, guys, to the downside, however, because we'd just be looking for a weekly higher low for possible establishment of a new weekly uptrend. And that would be what we'd be looking out for on Google to the downside. Not to the upside, of course. If you just continue this beautiful daily uptrend, keep in mind, guys, big resistance above us, right? We know it's a big one. 172 up to about 178 should be a little bit challenging for the bulls. So as we move into this area, guys, it might get a little bit choppy. And as a matter of fact, a few of my trades that I took down here, this is where I'm really looking to start taking a little bit of profit on those. In terms of long-term though, still a beautiful opportunity to pick up some long-term shares for a portfolio for Google, in my humble opinion. Now looking at Meta, tremendous day, right? 1.74%. And they just continue this monstrous move to the upside. The next area of resistance, guys, is 600. So now hopefully you understand what I was saying when I was saying that Meta was cheap down here, right? At $500, it had a peg ratio of 1.23. Those discounts are not going to last forever, guys. We have to be buying the heck out of these discounts, especially on a company as solid as Meta. And as you can see right now, Meta with the beautiful weekly expansion. So no red flags to the bulls at all. Even if we were to lose this daily uptrend over the next couple of weeks of trading, you guys know the drill, right? Looking for a weekly higher low for possible further trend continuation. Meta bulls in full control of every single time frame right now. Full control of the monthly, full control of the weekly, which is why I've been saying as well, guys, do not think that just because a stock has ran tremendously from the bottom and that we're close to the all-time highs, do not think it's expensive. Share price does not tell the full story. As a matter of fact, it tells none of the story. You have to understand whether or not the company is cheap or expensive on a fundamental basis. And when you're a company like Meta, bringing in ridiculous net margins, like 30%, bringing in tremendous amounts of free cash flow. Look at this free cash flow. Absolutely ridiculous free cash flow by this company, guys. And look at this EPS expansion over the next few years, right? Beautiful EPS expansion. All that makes them extremely cheap, even at the 500. So hopefully you guys are able to buy some shares along with myself down in these lower locations, because now we are seeing a lot of those benefits. So congratulations to all the Meta bulls out there. Moving into Microsoft right now. Microsoft continues to be down a little bit, but in my humble opinion, guys, this is one of the best buying opportunities right now in the Magnificent Seven. Microsoft down, daily downtrend in motion right now, and coming into the short-term timeframes. Keep an eye on this, guys. 4-hour almost coming into oversold conditions, and hourly teetering on oversold conditions. Now, usually when Microsoft comes into these shorter term time frame oversold conditions, it tends to be a decent buying opportunity for the stock. And I don't think that this time is any different. Daily downtrend is underway. So what we're looking for at this point, guys, is a recapture of the hourly uptrend. When we get the recapture of the hourly uptrend, you know that your daily move down is finished, and then we will measure the size of the move to the upside, right? As of right now, though, it is still just extended weekly consolidation, and the bulls still have a decent amount of space. Anything above 400, just going to be looking for a weekly higher low for possible further weekly trend expansion into the end of 2024. Microsoft too, guys, really since the month of, let's call it late January, early February, have not done a lot. But that's not because the company has not been growing, guys. This is just normal price action, right? Microsoft valuation is fairly decent right now. Microsoft usually always trades a little bit rich, but that's just because it's an extremely consistent company, right? Very predictable, very consistent. So I do believe that in these lower $400 ranges, any purchases made down here over the next year, guys, are going to be heavily rewarded into 2025. I would not be surprised if Microsoft just continues what it does usually in this monthly trend expansion here into 2025. 2025 price target for me has to be anywhere between $450 to about $500. I would not be surprised, guys. So make the most of these discounts when you can, because eventually these things just break and run away just like Meta did in the past. Now moving into Netflix. Netflix not with a bad day today, down about only 0.6% and really maintaining this tightening range above, right? We know we still have the daily uptrend. Now we have been trying to establish some daily higher lows well above our area of all-time high support, which is pretty much let's call it 700 down to about 671, right? No red flags at all, just sideways consolidation for the most part, nothing to report here. And even on the weekly, right? We know we're in a beautiful weekly uptrend. The bull's trying to set up for some daily or some weekly higher lows rather, a lot of space, anything above 663 rather, just looking for a weekly higher low for possible further trend continuation on Netflix. So not too nervous for the company, but also keep in mind, they're one of the first big tech names to report, coming up shortly here in about 2 weeks worth of time, Wednesday, October 17th. So I like to see the bulls at least maintain this range of support prior to their earnings, give themselves the best chance, if they have a good quarter, guys, of getting further weekly trend expansion underway. And of course, if earnings are bad and we start coming back down towards the 650 or something like that, buying opportunity on Netflix. Now moving into NVIDIA. NVIDIA, very good day today as well, 3.37% to the upside after yesterday's good performance too, and really doing a good job of protecting this week of this daily uptrend, right? Reacting nicely from the moving averages, reacting nicely from this area of support, 119 down to about 115, and we'll just keep an eye on NVIDIA. Can they continue this daily uptrend in motion with a break of 127 and possibly start retesting this area of the 130s? Why is the 130s important, guys? That's what's holding us back from the weekly uptrend time frame, right? So 130s has been a big challenge for NVIDIA bulls ever since the month of June. We have not done too much. Now, in the event that we are not able to get it done, guys, and we get rejected and come back into this area, is it that big of a deal? Well, probably not at this point, guys. Let me just erase this expected move right here, the yellow line. Probably not. Similar to SMH, guys, maybe just expecting a tightening range. So in the event we continue breaking down in semiconductors with a little bit more uncertainty, right, it wouldn't be that bad of a thing. We did the exact same thing in the fall of 2023. And at that point, if we do come down a little bit further here, guys, into maybe the 115, 114, 112 again, it's going to open up some short put opportunities down below here, 105 to 100. I would love to play more short puts on this company, but for now, the bulls are looking very healthy. Just not much in terms of levels being broken, right? Still relatively sideways in terms of the price action on the short term. Moving into Tesla right now, Tesla not performing too poorly at all today, even though they're down about 3.36%. We have not lost any major levels, right? Beautiful daily uptrend is still in motion right now. The bulls have given back a lot of the move, but I'd be paying special attention to this little line right here. Previous resistance in the past, not only here, but also here, right? That is roughly your 235 area. So you'd like to see the bulls play a little bit of a defense around here. In terms of the short time frames, coming in oversold conditions. So if tomorrow's data is good and the markets are green, Tesla bulls have a chance at starting to kind of reverse this into the hourly uptrend and protecting this daily downtrend swing and making a second attempt at the 265. But we know, guys, 265 is very challenging, right? Very challenging location for Tesla in the past. So that'll be the one to watch in the next coming weeks, especially as we move closer to earnings and we move closer to the robo-taxi event for Tesla as well, right? So we'll keep our eyes peeled on this one. The worst case scenario for short-term bulls is establishing a lower high into lower low scenario. That would be synonymous with a weekly consolidation phase underway, which arguably we started a little bit right now too, but the weekly bulls still control this one too, guys. Just looking for a weekly higher low, anything above 202, just looking for that weekly higher low. So I wouldn't rule the bulls out just yet, guys. They still have a lot of momentum on their side. They still have a lot of space for these weekly timeframes. Tesla, for me, however, I need to find it a lot lower, guys. I will only start playing this one if I can find some better pricing in the lower 200s. For now, I'm kind of just sitting on the sidelines, waiting for the robo-taxi event, waiting for the earnings event as well, which will allow me to have a better glimpse into the company's next 1 year of possible guidance as well, right? Now, moving on lastly to Palantir, the biggest winner of the day, once again, 4.67% to the upside. And we were saying, guys, that even though Palantir was extended, right? And even though I personally wanted to have a little bit of a pullback on it, that we were still in full bull control, right? Never losing this lower, the higher 35 levels right now, looking very healthy. And now the bull's just following through. Daily uptrend just continues right now, still daily overbought conditions, and now challenging the top end of resistance, guys. This one is going for the $40 range. Of course, even though the valuation is sky high right now, guys, retail just doesn't simply care. You know, valuations can stay high for a very long time, just as they can stay low for a very long time. Short-term price action, though, for our trades is key, right? As long as the bulls do not lose major levels, we cannot say that this one is about to roll over, right? As soon as we would have seen a possible rollover of the 35.86, then we can say, okay, daily downtrend is underway, probably expecting the weekly higher low. But that did not happen, guys. They did not roll over at all. And as we're seeing right now, the weekly uptrend simply continues. So congratulations to all the Palantir bulls out there right now. I have to pat myself on the back too, because I have my shares. My average cost is about $11 all the way down there with a decent amount of size. So looking very good, guys. But this one, once again, for me remains a hold. I'm not buying any more shares up here. I'm not selling any shares up here, even despite the rich valuation. I am just holding the stock. If I want to add, guys, I need to see a better price, that's for sure. So once again, I will be looking for, well, at this point, guys, daily higher lows are set, right? 36 roughly. So any pullback right now, looking for a daily higher low for further trend continuation in the event we were to roll everything over, set up the daily downtrend, and then go into weekly consolidation. If we get rejected right here, well, that is going to be the one that I'm looking for a swing trade. The risk reward gets a lot better if we were to pull back to 35, 34-ish, right? Looking for the weekly higher low for a second attempt at the $40 range. So that's the type of trade that I'm looking for myself. In terms of swing trading Palantir, I'd be very cautious trying to put in some extra trades up here, right? The risk reward is just not the best right now. That's pretty much everything I had for you guys today. So if you appreciated today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these videos every Monday through Friday after the close. Hope to see you back in a future edition of them. And lastly, guys, if you have any comments whatsoever, please always feel free to leave them down below in the comment section. If you want a second opinion on a stock, if you want me to look at a stock in some of our subscriber request videos that we do every single Saturday or every 2 weeks on Saturday, let me know. Technical analysis, stuff like that. If you want a second opinion on an options trade, if you want to discuss about the macro environment right now, anything you want, leave it down below in the comments and I'll answer you within the first 24 hours. So take care, guys. Big day tomorrow, and I will see you after the close. Peace.